Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Tellurian. I'm going to be talking about giving my opinion on whether I think Tellurian has a high potential for a short squeeze or not. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian, so this video should be for your entertainment purposes only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So, that being said, let's look at Tellurian. One of the things behind my thesis at one point, as my original thesis was purely based on the fundamentals. At some point, I did actually look at the amount of shares that were short, and thought maybe there would be a little bit of a bonus effect from some of the shorts covering. I wanted to give my sort of current thoughts on this because I've seen other folks talking about this, that this could be a potential short squeeze candidate. And it is, it's a bit attractive when you think about it, right? That Tellurian could announce bank financing, something that largely de-risks the project, the Driftwood project, at least for phase one. And it gaps up, and that could be a big catalyst for the stock. And that the open short interest, that a large portion of that could end up, sort of being closed out in a hurry, pushing the stock up even further. But I want to talk about that a little bit today. I think there's varying degrees of a short squeeze, right? I think if we think about it, a really massive short squeeze, something that's going to be where the large portions of the movement in the stock are going to be driven by short covering. I think you really need, and from what I know, I think you need kind of one of two things, right? You have to have people who have short positions that are unhedged, where they're trying to close their positions no matter what, right? In a price insensitive way, where they say, hey, I just got to close this no matter what. This position is getting too big for me. I'm risking margin call, those sorts of things. And that needs to happen in a sufficient volume to actually be driving the price changes in the stock, as opposed to just being a small portion of the volume that sort of gets absorbed up in the larger amount of trading that's going on. And if we do look at what the current short interest is, this is the exchange reported, the FINRA reported short shares right now is at 67.92 million shares. That was, I shouldn't say right now, because we don't actually get up-to-date reporting as retail investors. I do not believe that there's no source that I'm aware of that exposes that. This is in mid-April, and if we go back to the graph, just to remind yourself, mid-April was, let's go back 1 month, and on April 14th, the stock was pretty near a recent high, right? Above $6. That's at least where it closed. And for most of April 14th, you can see here it was in the 6 to 620 range. So that on the high note in recent history, right? It has spiked up slightly higher, but that's kind of like a near-term maximum. So if we look at that, at least gives you some context for where it's at. And this represents about 13% of the overall outstanding shares. I actually think that's what's most important. I know a lot of people like to use the short percent of the float, and while it's true that some amount of the stock is locked up by institutions, I don't see institutions as being price insensitive a lot of times, right? They will actually sell some of their position, and so I don't view those as I don't view this as such a meaningful amount. I think the percent of shares outstanding is a much more meaningful amount in terms of the sort of gauging the interest. And I mean, 13% is not trivial, right? There's a lot of stocks out there that, big mega caps that are solid companies that are 2%, 3%. They're very, very small. So I mean, 13% is not nothing, but it's not huge, right? We're not looking at something like GameStop. Yeah, I mean, that's the example everybody wants to call out. GameStop, where the percent of shares that were short was 100% of the shares outstanding, or even above. So we're certainly not in that situation. And the amount of shares that are short, as I said, is about, let's say, just round off to 68 million. If we compare that to just the average trading volume, I guess they have it right here on the same page. The average trading volume is about 23 million shares per day. However, if you look at the high volume days that we have had, this is the daily volume. Here you can see it's in this column here where I'm highlighting it. I'm going to scroll down through here, and you can see, yes, most days are in like the mid 20s or so. Some here is lower down in the teens, but when we have high volume days, it can get much higher, right? Here's a day where we had almost 75 million shares traded. Here's another day where we had 68 million shares traded. And so there are some of these high volume days. And so it's not out of the question to think that a large portion of that short interest could be covered pretty quickly if we have, one or two high volume days, if there were, a catalyst event that was announced, such as, bank financing. One other thing that I looked at is I actually tracked, I've been recording for myself as I started at the beginning of this year. I'm actually writing it down. What is the open short interest over time, so we can see? And so it has crept up just slightly since this is as of the beginning of the year. Let me get my x-axis there where you can probably just barely read it. This first data point is at December 31st, the end of 2021. And each data point here is effectively another half of a month. So the most recent one here is again in the middle of April. So we can see that it's up slightly since the beginning of the year, but not a ton. It hasn't changed in a huge manner. These red bars are how many new shares we have short in that particular report for that 2-week period. And so you can see it was increasing, and now it's actually been decreasing just a bit over the past month and a half. I also looked at what would in those periods where we had new shares that were short. I should probably actually delete these ones where they're positive. Well, I guess that's not really necessary. Yeah, I should probably delete those ones because it doesn't really make sense at the moment. But the question is, if they opened shorts during that time period, what would the value of those short positions be? And really, I'm looking at where there would have been losses. And I have two numbers here. I also went through and I wrote down what was over that 2-week period, what was the lowest price of the stock traded at, and then what was also the highest price of the stock traded at. So, because we know that they had to have opened them somewhere in between those two values. And we can look at this here. If they open them at the highs, that is the most advantageous for the shorts, where their short positions are less negative. And so we can see there's a couple rows here where you see, hey, their short positions were worth, negative 9 million, negative 13 million, negative 6 million. As of today, this is against their closing price today of, was it 486 is what I used. And then if they actually open these closer to the lows, if they open at the lows here, they would be, much higher, much more negative, where, negative 20 million, almost negative 21 million, negative, 14.5 million here. And so reality is probably somewhere in between those. And so we can say that, hey, they have actually lost a material amount of money. And then as we saw, some of those short positions or the short interest went lower here in a couple of those periods, presumably closing out some of this interest that had just been opened up since the price of the stock has gone up pretty drastically. However, sort of all of that being said, I think it's possible that we're going to see a bit of folks wanting to close out their short position because maybe their short thesis is that driftwood is not going to get financed, or the financing is going to be on horrible terms. And when there's an announcement, both of those risks and those unknowns become knowns, and then they can reevaluate their thesis, and they may want to get out. However, I actually think that there's a couple things working against this, right? Number one, if you caught my statement up at the very beginning, you need to have unhedged short positions for this to sort of lead to a squeeze for them, right? Because if they have a hedge, right, if they have calls outstanding that sort of that will cap their losses at a particular point, they're not going to be price insensitive in closing out their positions. That is one aspect to this. And, I have to imagine that a lot of the folks might have their thesis and think that is most likely that driftwood doesn't get financed or has poor terms on their financing. But, I'm sure they recognize that there's a possibility that they're wrong, and they might have some sort of a capped loss there in the form of holding calls to hedge their short position. The other thing that I think works against the potential short squeeze pressure is sort of two things. Number one, the fact that another piece that kind of goes along with this and is how much does it cost for them to keep that short position open. And this is if you've never seen this before, this is a website, iborrowdesk.com, that at least reports from one exchange what does it cost to short the stock at the current moment and how many shares are available to short. And this shows there's plenty of shares of Tellurian available. There are 10 million shares available. And I think that's really just like an illustrative number. I think there are actually almost strictly more than that available. This is just saying that there are at least 10 million shares. And so is an annual fee of 0.3%. So that is a very, very small amount. This is a very, very small fee to pay. So I think that's one thing working against it in the sense that, it doesn't really cost a lot extra to keep these positions open. So even if we had that gap up, unless the short interest fee really rises, or unless there's some, lack of liquidity where they are forced to close out those short positions because the shares are being recalled, I think folks, even if it works against them, are going to know that they have time to close out the position, right? In the absence of a huge fee that's eating away at them and causing them to really have to get out immediately. The other thing that is going to, I think, work against a short squeeze here is the fact that Tellurian itself does have, this at the money stock offering that has been registered, and we have no idea when or if they are selling any stock currently, but you have to imagine that they announce bank financing, the stock price goes up, they're going to want to capitalize on that, the company itself, and they're going to want to sell some stock. So that's going to add, you just put more shares on the market that somebody has to buy, and that's going to be effectively downward pressure on the stock price. But really, I should say it's increasing the supply of shares that are out there, increasing the supply of shares that are being sold, because they have to sell these shares. They're not holding them. The company isn't. I mean, they're holding them now, but they want to sell it. That's the whole point of this offering. And so I think that actually also caps the potential for a short squeeze pretty significantly, in the sense that even if the stock goes up, the company itself is going to want to sell stock. And so it's not going to become, it seems unlikely we're going to hit this illiquid environment where the shorts are going to be forced to close at any price, and that there will be no one wanting to sell shares of them when the company itself has an offering outstanding. So all that sort of it leads me to a current opinion that I really don't think it's likely that we're going to see a major sort of gap up, parabolic move in the price due to some sort of a short squeeze situation. If anything, and it's a big if. Again, as always, it should be a big if. I have this big disclaimer at the beginning. I'm not a financial professional, so this is maybe it's a bit above my head. Maybe I really don't understand what I'm talking about at all. But I think if we were to see anything, it would be something like what happened to Tesla, in the sense that there was a very large short interest in Tesla over time, and maybe there still is. I don't follow Tesla very closely from a stock perspective, but I know that at one point they had, I think, 20, almost 25% of their outstanding shares in short interest. And to my knowledge, we also never saw a particular steep parabolic move up, nothing GameStop style, or other stocks that have had sort of the short squeeze potential. Overstock comes to mind, but you did see, the stock just going up and up and up over time. And some of that clearly was those short positions being closed out over time that just sort of added on to the buying pressure for the stock. And I think if we were going to see anything, that would be, the form that this would take, right? Where you would see some of that short, those shares that are short, that short interest being closed out as a stock, as risks become, sort of the project becomes de-risked. We sort of see what the terms are for financing, and people are able to value the company and value the stock better. There's less uncertainties. Therefore, the stock price can actually be sort of more stable and known a little bit better. And so people who are underwater on their short position are going to want to get out of it. I just don't see it. I don't personally. I think there are too many factors working against that being, really sort of leading to the squeeze potential. So that is my opinion right now. Of course, I could be wrong, and hey, I'll be pretty happy if there's some ridiculous short squeeze and the stock goes up parabolically. Again, I've just, as I explained in the past 15 minutes, I don't think that's particularly likely. So, all right, let's see. Is there anything on the chat? Nothing on the chat today. So thank you very much for watching. I do these videos usually late in the evening, I should say, 10, sometimes 11. Tonight was even midnight in Eastern US time. So if you are interested, that is when I tend to do these. I do these videos, almost all of them live. Usually I try to hit Sunday through Thursday evenings. I don't really do videos very often on Fridays or Saturdays. And sometimes I miss days, but that is such is life. Yeah, so if you're interested, that's when I tend to be on here if you want to hop on and chat with me. Otherwise, feel free to chat in the comments below. And that is everything for today. So thank you for watching and have a good one.